All right. Hey, everyone. So my name is Jacob Wolf, and this week I was assigned to do the example problem 10.2a. And so let's go ahead and check it out. I went ahead and imported it or copied and pasted it into an Excel sheet just so we can see it a little better and mess around with it. So we're going to go ahead and take a look here. Here where we have the problem of a Sunland company, and it says that they borrow $93,600 on July 1st from the bank by signing a $93,600 7% 1-year note payable. And so, sorry, I'll erase this real quick. So what we have here is for our note payable. Obviously, we're gonna have that as one of our accounts, and the other account is gonna be a cash account. So we're gonna go ahead and type in cash to this top account, because when we're receiving cash, we're going to go ahead and debit that. So that cash account will be debited by $93,600. And then we're going to go ahead and look at that second account, which I said was the notes payable. We're going to put that in there. A notes payable account will increase by $93,600 as well. But we're going to go ahead and credit that. So $93,600 credited to notes payable, and that balances out both of those accounts right there. And I guess that's part A, but I mean, that's pretty self-explanatory. That's just putting in there, the company borrowed that $93,600. If we go ahead and go to that part B, just part of that same problem, it says prepare the journal entry to record the accrued interest at December 31st. So this is talking to the end of the year, assuming adjusting entries are made only at the end of the year. So it says that their adjusting entries are going to be made at that end of the year, and we're going from July 1st. So if we go July, August, September, October, November, December, that's a whole 6 months. That's half of the year that they're going to be paying interest on. So our accounts that we're going to be dealing with in this part B is an interest expense, just because when we are paying interest, that goes into our expense account. It's debited to an expense, and that's the interest expense. And the other account is the interest payable. Oops. Payable. All right, so these are the two accounts that we're dealing with here. Just on a side note, if we go ahead and take that $93,600, as we know, to calculate interest, you're going to multiply $93,600 by the 7%. We go that times 0.07 is equal to 6,552. Now that's a full year, 6,552. That's the full year of interest. Like we were talking about, this is July to December, so we're dealing with half of the year. So if we then take that 6,552, divide it by 2, divide it in half, we get 3,276. And that is going to be the value that we use to debit. And oops, I'll just go ahead and put that in there. 3,276 debited to interest expense. And then that interest payable, we're going to balance it out by doing the same, 3,276. And that should be it for that problem 10.2. Hopefully that was a decent explanation. Hopefully it helped to be in Excel.